In this presentation, we're going to take a look at the relationship between the receive payments forms and bank feeds. Let's get into it with Intuit's QuickBooks Online. Here we are in our Get Great Guitars file. We're going to go on down to the reports on the left-hand side, opening up our favorite two reports, starting off with the balance sheet. So we're going to open up the balance sheet. Going to change the dates up top, those dates from January to December. So ending date 12/31/20. We're going to go ahead and run that report. Go up to the tab up top, right-click on it, and duplicate that tab. Back to the tab to the left, back to the reports down at the bottom. We're now going to be opening up our second favorite report, that being the P&L, the profit and loss, the income statement. Going to make the dates up top just for the month that we're going to be currently working in. That's going to be from 01/01/20 to, that's 04. I said it wrong, but I typed it right. So 04/30/20, and run that report. Then I'm going to right-click up top and duplicate that tab. So we're going to duplicate that one. Then we're going to go back to the first tab again, where we're actually going to go to the banking section, to the bank feeds that we have been working on so far. So here's our bank feeds. We're down to these last two deposits. We're going to be working on this $17,000 deposit here. Now we've looked at our flow chart. Here's our flow chart in the desktop version. We've matched an invoice. Let's say we want to use invoices. Last time we matched invoices, and we even considered the invoice to help us calculate the sales tax and recording the invoice and then matching that directly to the deposit from the bank feeds. Now let's say we take it in two steps. Let's say we make an invoice and then we have a receive payment on the invoice, right? We have an invoice, then a receive payment on that invoice so that we can basically increase and then decrease the receivable and control that component, and then match that to the deposit that's going to happen in the bank feed. So let's see what that might look like. So let's say that we're going to go back here. We're back on the first tab. I'm going to make invoices. Now the invoices would obviously be in the system before we have the deposit happening. So I'm going to make the invoices as a 4/1 again. So I'm going to go back to the first tab, the dashboard. I'm going to go up to the plus button up top. We're going to make an invoice. So I'm going to make an invoice. And again, I'm going to make two invoices just to make it a little bit more complex that are going to add up to that 17,000 amount. So I'm going to say that this one, first one is going to be from, let's say, Diana. That's our customer. And I'm going to make it as a 4/1 again. And I'm not going to choose a product or service because, again, I'm not tracking the inventory, or I might choose basically a service item. But I'm just going to call it hourly service. Hourly service. And then I'm going to say that this is going to be, I'm just going to put in the amount, which I'm going to say is going to be $9,000 for this invoice. I'm going to say that this isn't taxable. I'm going to say that this is going to be an item that is a non-taxable item. Therefore, I'm not going to be dealing with the sales tax. So we won't be dealing with the sales tax this time. What's this going to do then? Increase the accounts receivable because it's an invoice, other side going to sales. So I'm going to go ahead and save, and let's say save and new. So I'm going to say save and new. Let's say we have another invoice here. I'm going to scroll back up top and pick up the second one. Another invoice, and this is going to be for, let's say, Jenny. So we'll pick up Jenny here. And we're going to say this is one, again, hourly service of some kind. And we're going to say the amount here is going to be $8,000. So that $8,000 and the $9,000 will add up to the $17,000 that we saw on the deposit. Now I'm going to say save and close. Save and close. And what will those two invoices do if we go to the balance sheet and I go to the accounts receivable? There should be an increase to the accounts receivable on 4/1. For those two invoices. So if I go back down, we have the invoices for Diana and Jenny right here, and that's going to be the 9 and the 8. The other side should be on the P&L, or profit and loss. If I go to the profit and loss report and we take a look at, let's refresh it. Let's refresh the report. There we go. Now I'm going to go back into the sales item, and I'm going to see Diana and Jenny. For those items, there's the 9 and 8 there. So I'm going to go back up top. And also note that now that I'm tracking the invoice, I can also track the detailed report, the transaction detail for the customer detailed report. So if I go back down to the reports on the first tab and just take a look at the customer detail, customer balance detail, let's do customer balance detail report. Then we can see for these items, Diana, there's the 9,000 and there's the 8,000 for Jenny. And we can track who owes us money. That adds up to the 28,934. And if we go back to the balance sheet, then we see the 28,934 on the balance sheet. So that's kind of the point of tracking the accounts receivable. Then let's say they pay us. So let's say we go to the receive payments. They're going to pay us. That's the next step in the transaction. Let's say we want to manually see them paying us and then record the received payment for them at that point in time. We're going to record the fact that we have received the payment. So we want to be able to do that rather than wait till it clears the bank in order to record it. If we get the payment, we'd like to record it then. So at that point in time, then I'd go to the plus button up top and we'd go to receive invoice payment. And then I'm gonna select the drop down and we say this one came from Diana Martinez. Let's say that this happened on the 2nd here. So it happened on the 2nd. And we have our invoice. We're working with this invoice. So we're gonna pick up this invoice. Now, what's this going to do? It's gonna decrease the accounts receivable. That's what the receive payment means. The other side we can either put to, typically the choices would be the checking account or the undeposited funds. Now, if we use the undeposited funds, it's like a clearing account, meaning what if I got a bunch of payments and then I go to the bank and I deposit them in one lump sum? Then I want to go through undeposited funds because if I don't, then it's going to be confusing for me to see the deposits in my system batched in a different way as they will be on the bank statement. I won't be able to tie the two out very easily. However, if I think I can tie them out, like if I get paid one check at a time and I know, and that's how I deposit it into the bank, and it's going to show up in the same way, then I can take this and say I'm going to make this go directly to the checking account. So let's try that. Many people will want to do that if they can avoid going through the undeposited funds. But again, you can only really do that if you're not collecting and batching a bunch of different deposits and then depositing them at one time, like you would if you're running a store. You'd have a bunch of money paid in different formats. You'd collect it all, and then you'd go deposit it at one time. So that in that format, you would have to basically use the undeposited funds. So let's go ahead here. We're going to say it's going to go right into the checking account. Then I'm going to say save and new. So let's say save and new. And I'm going to say that we're going to have our second individual, which let's see if I can remember who it was here. It was, who was it? Jenny Jones, that's who it was. I couldn't remember with the pressure of you watching here. I had to stop the recording, and then I totally came to my mind. Anyway, here's the 8,000. So here's the 8,000. I'm going to check that one off. Same kind of thing. It's going to reduce the receivable. It's going to reduce the receivable with a receive payment. The other side, I'm going to put into the checking account. So it's going to go directly in the checking account, but it's going to show up on our books as those two separate items. And in reality, we batched them together and deposited them into the checking account. Therefore, it's going to show up on the checking account as this one deposit of 17,000. All right, let's go ahead and say save and close. Save and close. Let's see what happens to our balance sheet and our income statement. So if I then take a look at the balance sheet, I'm going to close the hamburger, hold down Control, and scroll up. And then let's go into the accounts receivable. So we'll go into the AR, and we entered those as of, was it 4/2? So here's our two payments. Here's Jenny and Diana. So that's decreasing the accounts receivable. So it went up and then it went down. That's typically what happens. If we look at the balance detail report or the customer detail, which is over here on the first tab, and I check that out, we'll see a similar pattern, of course, here. That's what we want to do. That's what we want to see when we're trying to track accounts receivable in QuickBooks. We want to be able to track by customer who owes us money, who's paid us that money. So if I scroll down here, we're going to say that we have the only invoice left. I think it was Diana, right? This is only showing the invoice left, so the payment was made. Therefore, we're left with the only open invoice of the $950. Jenny Jones at the $1,500, the only invoice left, and that adds up to a total of $11,934. That amount then should tie out to the total in the accounts receivable. Let's scroll back up top, go to the accounts receivable. and 11,934 there. All right, so the checking account, we have the checking account, and then the accounts receivable happening in the receive payment. Now let's go back to the banking section and see what happens in terms of our bank feeds. So we'll go to the banking. I'm going to hold down control and scroll down a bit so it doesn't do anything funny, hopefully. Now notice those two items went into the checking account, but it's not tying them out. It's not doing that matching thing here. There's no match because QuickBooks couldn't recognize it. There's two deposits, and that's the problem. So if you have a lot of different variation in terms of the deposits and how they're grouped in the checking account, it's not going to match it. Now you could, if you could figure it out, you could say, well, that's not too difficult. I don't have too much going on. I can kind of figure that out and go to find. So I want to find the match here. And then if I scroll down to the bottom, I have these items. These are the ones I want, the payment ones with Ginny and Diana. They add up to the 17. So I'm going to check that one off. And then here's our reconciliation down below and that one. So you can kind of reconcile them out. You can kind of figure them out. But it gets fairly complex if you have a lot of different deposits. And it might be easier to use the undeposited funds if this kind of thing happens to you a lot, right? And so I'm going to go ahead and say save it. So if we then save that, then it matched those two out. If we then go back to the balance sheet, we already saw the transaction that's going to happen here. Simply what we did here on the bank feeds was match those two out. So we already had the deposits that we recorded, and now we just simply matched them out to what was recorded on the bank statement deposit. So we haven't recorded any new transaction there. We just matched those two items out. So again, notice how we had to do a little bit of work to tie those out. If we use the undeposited funds, going back to the flowchart to do this, if we go through the undeposited funds and then put them in the bank in the same format as will be seen in the bank, that will save us some time. So you might want to consider that option and doing the full service thing. Invoice, receive payment, batch the payments together in the format that you believe they'll be in the bank at, and then deposit them. Next time, we'll do the sales receipts. And in this format, most companies that use this format have to basically go through the undeposited funds, because if you're in like a restaurant or a store, or, you know, and you get paid cash and other kind of formats all day long, and then you're going to have to go to the bank and deposit it in whatever format the money is given to you in, right? So that means that if you're going to be collecting that information, you can't just record it into the bank as you collect it, because it's not going to be at all in the same grouping when you go to the bank statement. So you're going to have to put it in undeposited funds. You're going to have to figure out, you know, how much your total deposit is. Go to the bank, deposit it in one lump sum, and you want that same one lump sum to be reflected on your books. And so that's what we'll take a look at next time. You could do the same process with the invoice, the receive payment, group all those payments together, go through undeposited funds as you do so, and then deposit them in the correct amount so that they will be reflected in the same format on the bank statement.